Gold's going up because it's neutral. Look, there's nonsense about de-dollarization. No. When they put the sanctions in on Russia and took them out of SWIFT, that was a red flag to every other nation. You do what we tell you or we're taking you out. So that's what created BRICS. It wasn't that the dollar is back, not back, all this. It was geopolitical. That's why you're seeing the stock market up, gold up. You know, if you listen to the gold bugs, only gold was supposed to go up and the stock market is supposed to crash. Sorry, not happening. You see the dollar even rising. All right, fine. The euro made of high. It's the dollar's not collapsing.
Gold, stocks, and capital flows are sending a message that many investors may be missing. While headlines focus on de-dollarization and geopolitical tensions, the bigger story appears to be where global money is actually moving and why. Martin Armstrong, a veteran market analyst known for his work on capital flows and economic cycles, emphasizes that the recent rise in gold is not necessarily a sign of the dollar's collapse. He argues that sanctions, financial restrictions, and geopolitical pressure have encouraged nations to seek alternatives, leading to developments such as BRICS. At the same time, he stresses that international capital continues flowing into the United States because investors still view it as a relatively safer destination during periods of uncertainty. He further argues that Europe faces structural risks due to its fragmented debt system, while tangible assets such as gold and real estate continue attracting interest from those seeking protection from financial instability. Looking ahead, he predicts that increasing geopolitical tensions, concerns surrounding CBDCs, and continued movement of global capital could support both gold and select asset markets. The key trend to watch may not be de-dollarization, but the ongoing search for neutrality and safety in an increasingly divided financial world. Now, we present the clips from Martin Armstrong's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you and enjoy the video.
Let's say France basically gets in trouble, like Greece did, needs IMF or everything else. What are the traders going to do? Because the debt is not consolidated, the entire banking system of Europe has a cornucopia of debt from everybody. So then the traders are going to look and say, which bank has the most French debt? Short that one. So it's going to turn into a real mess. All right. Whereas that can't happen in the United States. If California went bust, all right, they're going to, all right, who's next? Oh, maybe Illinois. They're not going to attack the Fed. Our banks, the reserve is federal debt, not state debt. So it's a completely different system. And this is what I've warned them about. I mean, look, I'm a trader. I'm not an academic. I'm not talking about theoretical, we're all equal, all this bullshit. It never works anyhow. I'm a trader. I know how capital actually moves. This is what we do. No, it's still coming to the U.S. That's why you're seeing the stock market up, gold up. If you listen to the gold bugs, only gold was supposed to go up and the stock market is supposed to crash. Sorry, not happening. You see the dollar even rising. All right, fine. The euro made of high. It's the dollar's not collapsing. It's at the end of the day, when that first bullet is shot. I mean, we have a lot of major institutions in Europe. The ones that had gold, I told you better get the hell out of there. And they have. They have moved it to New York or Singapore or whatever. It's not my opinion. We just look at what they do. World War I, they shut down all the stock markets. You couldn't sell anything. All right. They will, when that first bullet is shot, they're going to clamp down with capital controls. They always do. All right. You have Europe pushing for the CBDC. They're saying by October, maybe January, I think more realistic, but let's see. They will cancel all the currency. You already have Spain saying you can't take out more than 3,000 euros in cash out of your account without government permission. They canceled their currency. Europe as a whole, including UK, even Canada canceled all its high denomination notes. So did Switzerland. US dollar. One of the reasons it's reserve currency. We don't cancel the currency. I never have. So about 70% of the paper dollars are actually outside the United States. Switzerland, it's debatable. All right. What the neocons have done, the countries that were neutral in World War II and won, Sweden, Switzerland, Sweden's joined NATO. They're no longer neutral. Switzerland, they confiscated, $8 billion of any money of a Russian. So they've lost their neutrality. There's no reason to treat Switzerland any better than Germany. Sweden, you just put all your people in the crosshairs. So you're probably looking at, once they do the euro, most others are going to be forced to do so as well. And then they're using the CBDCs. What I would be concerned about is that they will not just cancel the currency and force you into their CBDC. They may cancel all cryptocurrencies, anything that's a competition to them. Look, during the Weimar Republic of Germany, and the hyperinflation and all that, and because there was a revolution in 1918, and there were socialists even asking Russia to come take Germany. Anybody with money got it the hell out. You switched it to any other British pounds, whatever currency you could. So in 1933, when Hitler comes to power, he passed a law that said Germans were not allowed to have an account outside of the country. It was trying to bring all that money back. That's when Switzerland created the secret number accounts, 1934, to protect the Germans. This is what they will do. So the smart money's been moving to the United States. That's why you see the stock market still going up and gold going up, retail. Anybody with half a brain in Europe, all the talk shows, everybody's talking about war all the time. So the capital's been moving out.
The global financial landscape is being reshaped by politics as much as economics. Capital is increasingly seeking security, stability, and assets perceived as insulated from geopolitical risk. According to this perspective, the surge in gold is driven less by fears of a collapsing dollar and more by the desire for neutral stores of value. Financial sanctions and restrictions have encouraged countries to reconsider their dependence on existing systems, contributing to the growth of alternative economic alliances. Despite these shifts, significant amounts of capital continue moving into U.S. markets, helping explain why stocks and gold have been rising simultaneously. There is also concern that future monetary reforms, including wider adoption of CBDCs, could lead governments to tighten control over financial activity. As a result, tangible assets such as gold and real estate may remain attractive to investors seeking protection. The prediction is that geopolitical uncertainty and capital migration trends will continue shaping markets for years to come. Now let's get back to the interview.
What survived is basically anything that's tangible. So gold, real estate. I just had dinner with a real estate agent here locally, and did the same thing. Houses are just selling for cash. So it's people trying to get money off the grid. 2, 3, 4, 5 million. He said even up to 10 million cash.
With cash. Amazing.
So that's just, obviously they're trying to get money out of banks or countries or whatever. Particularly here in Florida, because after those hurricanes, some homes were flooded. And FEMA, which is a terrorist organization, in my opinion. So, we're regulating this. If it's more than 50%, you have to tear your house down. This is the bullshit today. So you're talking about older people that have been here for decades, retire and they can't fix their house. So they're selling them. So you have all these investors coming in, buying up everything they possibly can. These people are being, pushed out of their home all because of FEMA. You're lucky I'm not president, because I would basically in prison, probably most of them. I would say, you don't believe in due process, legal constitution? Neither do I. Off with his head. Next. First of all, to do that, they have to admit that they made a mistake. Governments don't admit that they make mistakes. Gold's going up because it's neutral. Look, there's nonsense about de-dollarization. No. When they put the sanctions in on Russia and took them out of SWIFT, that was a red flag to every other nation. You do what we tell you, or we're taking you out. So that's what created BRICS.
Mm.
It wasn't that the dollar is back, not back, all this. It was geopolitical, all right? Because you had Blinken even threatening China. You help Russia and we'll do this to you. Really? Are you an idiot? You just divided the entire world, financial system. But they're neocons. They only look at what's in front of their nose, and this is what I have to achieve. They don't understand if you achieve that, what's going to come. They do that with war. Look at Iraq. Or we have to remove Saddam. There's never, ever any consideration what comes next. You can look at Tony Blair's apology. It's on YouTube. He apologizes. He said, we thought we were freeing them from Saddam. We didn't realize we were going to subject them to more sectarian violence. So why are we still mad at Russians? NATO puts out this stuff that, Russia wants to invade Europe. Why? Khrushchev was really indoctrinated into Marxism. When he said, we're going to bury you, he really did believe that communism was the solution to evil capitalism. He didn't look at invading Europe economically to get something. It was philosophical. And so they still apply that to like Putin. It's just different. I mean, there's nothing there. Europe has to buy its energy from Russia. Forget gold. I've been to both. And I would say that the Russian version of communism came from Stalin, that he was paranoid. So he was worried what you said to your wife. China, they had the tall poppy thing. They don't care what you say to your wife, but you stick your head up and start talking to everybody else that gets cut off. All right. So I think that, honestly, that the difference that I saw was that China was able to boom very rapidly because they did not embrace Marxism all the way. Whereas in Europe, they outlawed religion. Stalin, if you really look at it, Lenin was copying the United States.
Around the world, investors are increasingly reacting to political decisions rather than traditional economic theories. The movement of money across borders often reveals where confidence is rising and where concerns are growing. A major theme is the growing demand for assets that are viewed as independent of government influence. Gold is highlighted as one of those assets because it is widely recognized and politically neutral. Rather than signaling the end of the dollar, rising gold prices may reflect broader concerns about sanctions, international disputes, and the fragmentation of the global financial system. These developments have encouraged countries to explore alternative partnerships and payment structures, while prompting investors to search for safer destinations for capital. Another important point is the difference between financial systems. Regions with fragmented debt structures may face greater pressure during periods of crisis, while countries with more unified systems can attract investment during uncertain times. This helps explain why capital can move into U.S. assets even while investors also buy gold and other tangible holdings. Looking ahead, the forecast suggests that geopolitical tensions, debates over digital currencies, and concerns about government control could accelerate the shift toward hard assets. Gold, real estate, and other tangible stores of value may continue benefiting if trust in institutions weakens and global uncertainty remains elevated. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.